So yesterday, something interesting happened. The markets dropped a bit. The Dow, the S&P, NASDAQ, all dropped a bit over nerves, and the European markets over nerves about what the Federal Reserve is planning to do. And they're announcing basically they're going to start to pull back in the year 2022 on the amount of money it's funneling to Wall Street. So you still got another 6 months, 5 months, where we're loaning you $150 billion at 0% interest rates, right? Well, my friend, he's been a mentor to me and a good friend over the years, Robert Kiyosaki, the author of Rich Dad, Poor Dad, has been accurately predicting what's been happening in the economy at every turn. And he has some really dire warnings about where we're headed right now as it relates to the US dollar, the overall economy, and what he's investing in right now. So I co-authored a piece with our friends over at Future Money Trends. It's a totally free report. You should download it because it's free, first of all, and it's a great read. And it'll give you some real insight into exactly what is going on with our economy. So here's a look at this. We'll put up the link on the screen. I want you to go and grab it right now. I'll wait while you guys all go and down. Just put in your email address and it'll be sent to your emails. So go to futuremoneytrends.com/dad, right? Rich Dad, Poor Dad, Rich. So futuremoneytrends.com/dad. And here's the report that we co-authored. We looked at a bunch of the data that he's been predicting and how just spot on he has been with what's going on in the economy. Obviously, he's been known over the years for making highly accurate market calls and being brutally honest. Like, he doesn't pull any punches. I've been in rooms where he will literally call out people for just BS. Like, he's like, that's total garbage, like right to their face. He's like, that's a total lie. You're lying right now in front of this room. Like, he will do that to people. He's not afraid to do that. And his latest predictions are absolutely shocking. One of them, he tweeted just a short time ago to say, the biggest bubble in world history is just getting bigger. Biggest crash in world history is coming. Buying more gold and silver right now. Waiting for Bitcoin to drop to 24,000. He did. He got down and he bought more. Crashes are the best time to get rich. Take care. So that was just one little shot across the bow. But he says, bear in mind that, his most popular book, of course, Rich Dad, Poor Dad, urges people to understand that their finances are and not rely on others for money, including central banks and the federal government, because they're going to let you down. Whatever you do, don't rely on a pension fund. Okay. So if you're relying on a pension fund right now, oh boy, folks, that's why you need to read this free report. Whatever you do, don't rely on a pension fund. And if you're relying on a stock market, I mean, look what's going on. Just the little bit yesterday that we got from the Federal Reserve, and they're worried. The stock market was worried just a little bit that the Federal Reserve is going to pull back $150 billion in spending that shouldn't even be going to Wall Street or propping up Wall Street. And we're sweating about a $2,000 stimulus check to you, but we spend $150 billion a month on Wall Street so they can borrow at zero interest debt.
And nobody's asking how do we pay for that? Nobody's asking any questions or anything about that because they're all quiet about it.
Yeah, it goes right to their balance sheet. And I mean, look, it sits on the Federal Reserve's balance sheet. And how are they going to pay it back?
Well, and when was the last time the Federal Reserve was even audited? We don't even know where all this money is going. Like they have tried so many times to pass a bill to get an audit, and it keeps getting pushed back, and it's never happened.
No, so it sits on their balance sheet.
There's been trillions of dollars just disappeared, and nobody knows.
Yeah, I mean, it just sits on their balance sheets. Look at the Federal Reserve, government subsidizing all kinds of programs, including, Federal Reserve has no choice but to crank up this printing press. They just continue to do it. And
understand, that's not even a government-owned bank. That is a private bank.
Mm-hmm.
So
sad.
Yeah.
As Kiyosaki explains, he said, this is the final devastating chapter of many years of foolhardy central bank policy, leading to an imminent collapse of the financial safety nets that so many Americans plan to rely on. That's the sad part, right? If you're planning to rely on Social Security or a pension fund, the Fed wants inflation, he says, to pay debt with cheaper money. The Fed will raise interest rates, causing crashes in stocks and bonds and real estate. And Kiyosaki goes on to say, he says, the biggest problem with boomer retirement right now, if you're nearing that retirement age, is Social Security, Medicare, and they're broke. They're broke. So we continue to print money we don't have to pay Wall Street, and yet the social security programs and our medical system is broke. You see what happens with these pension plans in California and other places. They're basically saying, hey, I know you've paid into this for 20 years and you expected to have a pension when you retired, but we're sorry, we just don't have it. So, sorry, bye-bye pension.
War. Sorry.
Yeah, it's gone. We spent it all on wars and propping up Wall Street. We don't have it.
How in the heck could we take care of you and the fact that you gave into this system for 20 years when we got to rebuild Afghanistan, man, and Libya and all these places we destroyed? We can't just let those places stay toppled. We got to put democracy over there. Your pension, like maybe when we're done with all that, we can come back and maybe see if there's some money for your pension.
Right. So what do you do? Right? I mean, I like to be solution oriented. Like, where am I putting my money? Well, I sort of follow Robert's lead on this. And again, go download. It's a 9-page special report. Read it. Read it. Read it. It's totally free. And again, I co-authored it with the team at Future Money Trends. So go to futuremoneytrends.com/dad. It's totally free. And one of the things he talks about is obviously Bitcoin. I mean, right over my shoulder here, Bitcoin chart, right? It was right before the show, it was at $46,000 for one Bitcoin. Right now, it's at $47,152. So what he talks about is the Bitcoin. He says, why Bitcoin? Why gold? Why silver? Get more gold, get more Bitcoin, he says. Get more silver while you can. Robert Kiyosaki says, why Bitcoin? Because it's an alternative to government fiat currency, which I've been saying for a long time here on the show. It gives technologically sophisticated young investors a chance to enjoy robust returns during these challenging financial times. Boomers, he says, had it easy. Plenty of jobs, low-cost real estate, rising stock market. Millennials have it hard, he said. 9/11, 2008 real estate crash, now COVID-19. Good news, millennials are tech-savvy. Bitcoin, blockchain, digital currencies give millennials a head start into the future. And this dip in Bitcoin price that we saw recently, great. It was an opportunity to buy. And again, we look at the central banks, as Robert talks about. He says, again, we can look to the central banks for the motivation behind this move. He talks about 50 years ago when, of course, we went off the gold standard and the Federal Reserve is propping up this fake U.S. dollar as the moment that the dollar died. It was the moment the dollar died. He says they're going to print another 1.9 trillion. They're going to print another 3.5 trillion. He says it's Gresham's law. Bad money drives out good money. So when a guy like me gets in my hand on Bitcoin, I'll never spend it. I'll hold it as an asset. So anyway, read this report. It's really fascinating. We go through all sorts of different details here about this next crash, what it's doing right now, why all you needed to do was yesterday look at the Wall Street responding to the Federal Reserve admitting that in a year or so from now, it's going to slowly start to taper. It's going to slowly start to pull back on the billions of dollars that it's giving away basically for free. And the stock market panicked a little bit. It's like, yeah, are you panicking? At the average American who doesn't have to rely on these yahoos, who doesn't get to rely on these guys. So anyway, an interesting report, and I put a lot of work into it. So go check it out. Again, futuremoneytrends.com/dad, totally free. So check that out. Thanks for subscribing to the channel. You can also become a channel member by going to morninginvest.com/join, where you can stick it to the mainstream media and support independent journalism. We're able to bring you the stories that you won't see on any of the major billionaire-backed networks. Thanks so much. We'll see you next time, everyone.